Hey guys, thank you so much for joining me today on Tracy's Tuesday Talks. I have a very special guest with me, Steven Caviggiola. He's been in the insurance industry for 24 years, and he is one of my referral partners that I send people to for their insurance needs. One of the first things out of his mouth when we first met was he helps people based on their needs, not on paying his mortgage. I apologize for the barking dog in the background. That is my four-legged son. Welcome to my home. So, Steven, tell me a little bit about yourself and why you got into the insurance industry.
Well, I got into the insurance industry over 20 years ago, really to provide an income so my wife could stay at home and take care of our kids. So I was a juvenile counselor for 4 years out of college. I do have a psychology degree. But I realized for me to do that, I was either going to have to go back to school and get a master's, or I could go into sales. So I got into insurance, and the rest is history. I just really enjoy, helping people protect themselves from medical bankruptcy. So I deal with health insurance, Medicare, life insurance, long-term care, disability. Don't do property and casualty. I sell the insurance products that cover people. I don't cover stuff.
That is great. That's great. And today our topic is long-term care insurance. As a coach, I get asked quite often, like, what is it and when can you be self-insured? So the first question I wanted to ask was, what is long-term care insurance?
Okay. Long-term care insurance is actually a type of insurance that covers people who cannot do activities. Now, a lot of people that need long-term care, they have an underlying health condition, but health insurance, Medicare doesn't cover a lot of this, because long-term care is you can't do 2 of the 6 daily activities, like feed yourself, bathe yourself, get dressed, get out of a chair. And so you need some sort of assistance. Now, it could be a health problem that causes it, but long-term care is the need to pay for then there's 2 types of care in long-term care. One's called skilled care. That's where a nurse comes, maybe does physical therapy, stuff like that. That's covered by health insurance. It's covered by Medicare for 100 days. But the biggest thing in long-term care is what's called custodial care. That's the cooking, the cleaning, the bathing. And so that is not covered by any type of insurance. And so that is the biggest expense that people face when they think of long-term care. It's actually they can't do activities, and health insurance and Medicare don't have anything to do with that.
Gotcha. So it's way different from long-term disability, which is what people think long-term care insurance is.
Yeah, long-term care disability is that you actually physically cannot work. Long-term care is I can't take care of myself. It's a big difference.
Yeah. So why is it important for people to have long-term care insurance?
Well, first of all, according to the LIMRA statistics, 70% of people over the age of 65 will need long-term care at some point in their life. And the biggest expense for someone, or the biggest reason why people file medical bankruptcy after 65, is tied into not having the funds for long-term care, because not only are the statistics 70%, the average person will spend $138,000 on long-term care, because if you have home health care, you're looking at about $3,000 to $4,000 a month. If you have to go to a facility, you're looking at $7,000 to $8,000 a month in today's dollars. We have no idea what it's going to be 5 years from now.
So that is just mind-boggling to me. So a little bit on the personal side, my mother figure fought cancer for 5 years, and then she had a whole slew of issues after that. And she said just after the cancer that it took her 5 years of retirement to pay off her medical bills. And by the time that she had done the long-term care and all that, because she couldn't take care of herself, like she was a really sick lady, like she only had 10 grand left to her name after being almost a million.
Right. Yeah, it will financially drain people if they're not prepared for it.
So what happens to people who need a nursing home? And we're just going to work through my dogs. I apologize for the noise. What happens to people who need to go into an assisted living or need some help, but don't have long-term care insurance?
Well, what's going to happen is you're going to be taken care of. And what most people who don't have the assets to take care of this, they go into what's called a Medicaid spend down. And what that is you'll have to use up whatever retirement you have. If you're single, you may have to sell your home, and you basically use up all your assets down to about $2,000. And then your state will take over and they'll cover your cost after that. The problem with that is once you become a ward of the state, they can place you in what's called a Medicaid bed anywhere within 70 miles of where you currently live. And so once you're under the ward of the state, you virtually have no choice on where you live anymore. And so why a lot of people actually get these products is so they can maintain choice. They can decide if they want to stay at home and pay someone to come take care of them, or they can decide where they want to live if they have to go into a facility. Because if you don't have that, you're not going to be thrown on the streets. You're just going to become a ward of your state, and you're going to lose all the freedom on where you can live.
I used to be an emergency medical technician in Washington State, and we did a lot of runs in and out of nursing homes that were for people who were wards of the state. And after seeing that and experiencing that and having to take people to the hospital from these places, that was one of the driving factors of why I want financial independence, to have that choice. And it's wonderful to know that there is an insurance out there that can help with that. Mm-hmm. So financially speaking, when could you be considered self-insured for these kinds of expenses? Is there like a dollar amount that's typical that once you reach this, long-term care insurance is no longer like a must-have?
Right. Well, we like to tell people that if you're making less than 50 grand a year, you probably don't need it, because you probably don't have a lot of assets. If you have that net worth of less than 50 grand, it's probably not a worthwhile investment for you. Mm-hmm. Same thing as if your net worth is over a couple million, you can self-insure. Mm-hmm. But it's between like the 50 and the 2 million of net worth. That's where we think this would be a viable product to take care of that. The other thing, even if people have the money, some people who can self-insure still like to use these products because it's a tax-free benefit. Where if they pull money out of their retirement, there could be some tax consequences to it, to where if I do it with an insurance product, it's tax-free. And obviously, if I have a lot of money, I can afford the premium. Mm-hmm. And the reason it's tax-free is because you're paying the premium with post-tax dollars, so your benefit is not taxed. Mm-hmm. A lot of people have their retirement in a pre-tax situation, a Roth, 401k, some IRAs. And so when they pull the money out, there is a tax consequence to it. Mm-hmm, mm-hmm.
Gotcha.
So it really just comes down to, a lot of people base it on need, or they base it on their taxable situation. And most people who have a lot of money know how to work the tax code and realize I'd rather do it with tax-free money than taxed money.
That's a good point. I had not heard about if you make less than $50,000 a year. That's interesting to me.
Well, it's net worth of 50,000, not less than 50. It's net worth. If I don't have a net worth of over 50 grand, I don't have a lot of assets to protect. Mm-hmm. Mm-hmm. Those people probably aren't in a house.
Yeah.
So that's where it's like, you're probably going to end up being a ward of the state anyway. Because again, it's really designed for people who have things to protect. If you don't have a lot of assets to protect, it's probably not worth it financially.
Yeah.
If I'm retired and I'm living in an apartment, a low income apartment, and I just live off my Social Security, I probably don't need that.
Gotcha. So it's to provide choices and then also to protect assets.
Yep.
Gotcha. So Tell me about some of the products that you have. One of the ones that you and I talked about beforehand was kind of like a hybrid that's a newer product.
Right. Yeah. See, what's happening in the long-term care market is there used to be several companies that sold long-term care insurance. John Hancock, Genworth, these companies were like the pinnacles in long-term care about 30 years ago.
Mhm.
The problem is when they started these products 30 years ago, they were not priced correctly. And so all of a sudden, 15, 20, 30 years later, people started to use it and these companies lost their shirts. So they had to jack the rates way up. So now you had people that had invested in something for 15 years and all of a sudden the prices tripled. And do I just get rid of this? What do I do? And a lot of those companies have actually went out of business. And so the market has shifted to what are called hybrid products. Hybrid products are actually permanent life insurance. And I know a lot of you who follow Dave Ramsey, the minute I mentioned permanent life insurance, you're saying, wait a minute, this is one of the times, because I was a Dave Ramsey ELP for 6 years, okay? This is one of the times that looking at a permanent plan is actually probably a wise thing to do because it's not based on building cash value. These hybrid products are designed to provide you a death benefit or provide you long-term care expenses, but there's no real significant cash value accumulation.
Mm-hmm.
And the reason why doing these products are so important is some of the biggest issues with traditional long-term care insurance is, first of all, the rates were unstable because they can raise the rates whenever you want. The second thing about long-term care insurance is if you got hit by a bus, you paid all this money for nothing and you can't use it. And the third thing is these plans, you had to go through very complex treatment plans to even get the money.
Mm-hmm.
These hybrid plans address all three of those because, first of all, because it's a permanent life insurance product, once you get in, the premium is locked in for the rest of your life. So you don't have to worry about huge rate increases.
Mm-hmm.
The second thing is if you get hit by a bus, somebody's getting a benefit. Okay, let's be realistic. If you're going to pay for a product, you want to pay for a product, you're going to get something out of it.
Mm-hmm.
And then the third thing is these plans are actually considered what are called indemnity products. So they're not as strict on what you can use the money for. For example, let's just say I'm someone that I need home health care and I can't go out and cut my grass.
Mm-hmm.
I can't use a long-term care policy to pay someone to cut my grass. I can use a hybrid plan to get money to pay someone to take care of my lawn. So it just gives you a lot more flexibility. Again, a traditional long-term care plan, I can't pay my granddaughter to come sit with me for 10 hours a week. With a hybrid plan, I could. So it's just flexibility. You're either going to use this for a death benefit or you're going to use it for a long-term care. So you're going to use this product and you don't have to worry about what's this going to cost me 20 years from now.
Yeah, yeah. So I remember from our conversation, it is not whole life insurance. It's basically a life insurance policy that you can use before you die to take care of you in your golden years.
Yeah, they price it out to where it keeps enough cash value to keep the plan in place till you're 120. But you're not doing this cash accumulation, which again, that was Dave's big problem is, whole life plans, universal life plans that you're using specifically for cash accumulation. There's other avenues that you could be better suited to take care of that.
Absolutely. So do you pay on this like you do a term life insurance?
What's that?
Do you pay on this like you would a term life insurance?
Well, it's going to be higher premium than term life insurance. So when I sit down with people and we design their situation, I use term life insurance to basically cover what I call their number. Mm-hmm. That if they die unexpectedly, this is what their family needs to pay off debt, mortgage, provide income for 5 to 10 years. A lot of times I'll take care of that with term because you can get those bigger face amounts for a lower premium. And you can, do it for 10, 15, because people, if someone's 50 years old, he doesn't probably need it till he's 80.
Yeah.
These plans are designed to, once you get in, they're going to stay in place till you get to be 120. So I always ask people, look, do you think you will die or need long-term care before you're 120? Because then you can't, if you say yes to that, you can't lose with this product. Because when I show people an illustration, it will actually show them that what they're paying in premium is actually their benefit is going to be more than they ever pay in premium. So again, if they get a death benefit, long-term care, or a mixture of both, you may have a $200,000 policy where you use $100,000 for long-term care, pass away, and then your beneficiaries get another $100,000.
Yeah.
So you're going to, this is the one plan I can tell people you're going to use. So the key to this is actually the earlier you get it, the more affordable it's going to be over time. And most people were told to start looking at long-term care in their 60s. Because of everything that's going on now, I recommend people start looking at these types of products in their 50s. Because they can lock it in at a lower rate. And the other thing that's happening is it used to be when you got really, really sick or you got really, really injured, you needed life insurance because you probably weren't going to make it. Now, because of the advancements in technology, people are surviving things and they need the long-term care because almost 50% of long-term care benefits are people under the age of 65 because they get in a car accident. They get cancer, and it affects their ability to take care of themselves. And so by getting in at a lower rate, again, health insurance isn't going to cover all this. This is not just a Medicare thing. This is under 65. So if I can lock it in at a lower rate and realize that I'm going to use this product, I just don't know when.
Yeah.
Because it could be when I'm 54. It could be when I'm 78. Yeah. But if I can lock it in at a lower thing, because the other thing that you run into, the older you get, it's going to be more expensive. And if your health changes, you might not be able to qualify for it. So,
yeah, super important. Super important.
Yeah, because the biggest thing with these is not so much. It's not so much the premium. It's can I qualify? Because they look at you totally different for long. Because it's like, I'll just use my father-in-law as an example. He played football his whole life. So once he got older, bad hips, bad knees. So he had hip replacements, knee replacements. That made him ineligible for long-term care insurance. Even though he sold a farm and he had hundreds of thousands of dollars, he tried to get long-term care because he was afraid if something happened to him, because he's about 10 years older than my mother-in-law. He didn't want her to he didn't want to drain all that money to pay for him. And because he had a knee replacement, a hip replacement, he was not eligible for long-term care. So those are things people don't think about.
Yeah.
Oh, you had a back surgery? No, we're not going to cover you, because the older you get, the more you may need someone to help you get out of a chair and get out of a bed.
Yeah.
And so you've got to think about those things, that it's not so much just your health, it's your ability to take care of yourself. It's your ability to move.
The younger, the better.
Yeah. Premium wise, and just like I said, more and more people are under age of 65 are needing this kind of stuff. So it's just, I've sold this product to people in their 30s because they saw stuff with their family and stuff, and they got it for peanuts.
Yeah.
I might as well get this. I'm never going to pay more than it's going to pay me. So, man, why don't I lock this thing in at a very inexpensive premium?
Exactly. And it's a great way to protect the financial legacy as well.
Yeah.
Another statistics, you kind of broke down the monthly cost of care, but basically a rehab facility, assisted living facility costs about $30,000 a year, whereas full-on nursing care costs over $100,000 a year.
Yes.
So this is super important to protect your nest egg, to protect your legacy, and also to give yourself some choices on where you end up.
Now, here's the other thing too that a lot of people don't think about. We have 11,000 people turning 65 every single day. It's going to hit 25,000 a day in the next decade before it starts going down. It's a little group of people called the baby boomers. One of the biggest fears is we're going to run out of space for these people. So now what? So again, I have found most people buy these products not to pay for going to a facility, to actually be able to have the funds to pay someone so they can stay home. Because 80% of all long-term care now is done in the home because of technology, and it's half the price. So
that is incredible. Thank you for sharing those statistics.
Mm-hmm.
So Steven, if people want to talk to you about protecting their financial legacy through long-term care insurance or through this hybrid, how can they get a hold of you?
A couple ways. Obviously, my phone number is 219-230-8410. So you can call me, or I have a website called localinsuranceoptions.com, where you can go in, learn about me. You can put your information in. It has all my contact information. But I'm with Health Markets. We're one of the largest independent agencies in the country. So I'm a broker. I don't pigeonhole people into one or two companies. I find the company that's going to do the best for you. And when it comes to the long-term care hybrid plans, there are a couple that kind of stand above the rest. My favorite is actually Securian. They're one of the largest life insurance companies out there because they have a unique benefit that once you go on claim for long-term care, you no longer pay premium as long as you're on claim. So, I mean, you could have this thing that might be costing you $100 a month. All of a sudden you start needing long-term care benefits. You don't have to pay that premium anymore, even if you drain out the whole policy.
That is incredible. Well, Steven, thank you so much for joining me on Tracy's Tuesday Talks. It has been a blast learning from you and talking with you. And thank you for sharing part of your story too.
Mm-hmm.
Right.
No problem.
Thank you guys. Have a blessed day. Come join me next Tuesday.